Hello guys, welcome to the Thursday forecast. So let's take a look at the euro and the US dollar, and right away I can see that this pair is heavily range bound. So we can see that it has not been moving up or moving down, it has just been stuck in this sideways range. Also you can tell by the wicks right here, huge wick right here and huge wick right here. So this to me is not looking good. I want to see cleaner price action. This is just telling me to be more patient and to wait for a better setup. So what I would like to see at this point, I would really be careful, but I would like to see a large push up and then a nice flag or maybe a trend to start, a nice break and a retest. Or I would like to see a large push down and then also a nice flag, maybe another push, maybe a break and retest trade. So just for the price to move away from this structure, I want to see it move away far to the upside or far to the downside. Of course, we do have these liquidity areas below and above the range, where the traders on the lower time frames, they are buying the bottom of the range, they are selling the top of the range, and they keep their stops in these liquidity areas. So also I will be looking out if we just ascend into the liquidity area and then reverse, get a nice opportunity to enter on a short, or maybe get a nice opportunity to enter on a long trade, something like this. Also do be careful if price just breaks and retraces. Usually that means we will still be stuck in the range. So I would say be more patient, look out for those liquidity areas, and be very careful when taking a setup. It really needs to be high probability and it needs to look really clean in order for me personally to take it, which I would also advise you to look for only those high probability setups since we are in a clear sideways range. So for the euro and the Japanese yen, this one has moved away from this range bound structure. So we did have this sort of a range bound structure where it was just stuck in this area, but then we did get a push, pulled back, sort of ranged around right here, and then continued down with a really large impulse. So this impulse does look good, but what happened at the end, we got a really huge wick. So that is a big warning sign. This huge wick is a big warning sign to me, and I personally am not looking for any trade. I want to see the break of the low or the break of the high. Maybe no, this is now forming a flag, so I will not be taking a flag because of this huge wick. I do like the momentum behind the impulse. It was really a large momentum, but then this huge wick is just a really big warning sign. So I'm waiting for the break of the low or the break of the high, and I will see if we get another push down and then a nice flag to go short. That would actually start a nice clean trend, as you can see. Then the market would be trending, so that is a good sign, or that would be a good sign. Or if we get a push and then a break and retest trade, of course looking for that one, that would also be a high probability setup. What I would not like to see is if we just range around between the low and the high. That is a bad sign. But since we did get a huge wick, it usually signals to us either a larger range or a reversal. So if we do get a V reversal, I will look for a small range and another push up and a flag. So that is a common pattern that happens. A V, small range, continuation up, and then we look to buy on the pullback. Be alert about that sort of a setup. If we do descend like this, I will look for a reversal to the upside, something like this. And if we do ascend, I will look for a reversal to the downside, something like this. So that's about it for the euro and the Japanese yen. So to sum up, I like the impulse, but I don't like this wick. I'm waiting for the break of the low or the high. If we do break the low with momentum, I'm looking to sell on a pullback, maybe a flag or a break and retest. Otherwise, I'm being more patient and I'm just sitting on my hands. Now let's take a look at the Aussie pairs. So we have the Aussie and US dollar, and this one doesn't look good. So we did have this sort of an ascending, sort of a correctively trending up. Let's mark out the moves. So we were kind of trending right here, then we pushed up again, and then we broke the high, retraced. Then we did push down, got a huge wick, retrace, push down, and then broke and retraced. So that is a bad sign. The first warning sign was, of course, this huge wick, and now the second warning sign is the break and the immediate retrace. At this point, I'm not looking for any trades. I'm expecting, to be honest, I'm expecting a larger range. This price action is just not giving me any conviction. So what I would like to see to look for a trade, I would like to see a large push up, flag, a large push down, a flag or a clean descending, then a reversal or a clean ascending, and then a reversal. So just the standard stuff to clean up this price action a bit, because the current price action is just not showing me any sort of potential. We do have kind of a reversal from an ascending structure, so that could be classified as high probability, but as I said, because of these warning signs, because of the huge wick and the break and the retrace, I'm just being more patient. If we do get that nice impulse down, as I said, I will look to sell, but it needs to show me some conviction, otherwise I will be sitting on my hands. So this doesn't look good, and let's now see what the Aussie and the Japanese yen has been doing. This one is a bit more interesting. So there were no opportunities for me personally to be taking a trade. So we did get this push up, but then we got an aggressive retrace to the entry area. The entry area would be this most recent high. So as you can see, we got this aggressive retrace right here, this first red candle, and then we got another red candle. So this is definitely a momentum shift, and when I see a momentum shift, I'm not looking for absolutely any trades. So I did stay out of this long trade, and then we did get a nice large impulse down, and then we got a huge wick. So that was a warning sign. I did like this impulse down. The prior price action has been pretty crappy, so I was really happy to see a large impulse down to clean up the price action a bit. But then unfortunately it ended with a huge wick, and then we broke the low, retraced. So two warning signs that the market is slowing down and that we are going to get more of a range bound condition. So that's exactly what I'm expecting. I'm expecting a larger range at this point. What I would like to see to look for a trade, I would like to see for the momentum down to continue. So I would like to see another push down like this, so that we get another push down that continues this downward momentum, and then a nice continuation pattern, a nice clean pullback. If we do start to descend, which I'm also expecting, I will look for a reversal, because this is also signaling to us a descending structure. So if we do start to ascend, I will probably be just sitting on my hands, because then it just is not showing me any sort of a high probability setup, to be honest, and we would still be kind of stuck in this overall range bound structure. If we do get a large impulse up, then that would signal to me a V reversal, as you can see here. Then we would get sort of a V, then I would look for a range, another push up, and then I would look to buy on a pullback. So to sum up, this one is not looking that good. The only good part was this large impulse, which ended how it ended. So huge wick, break and retrace, bad warning signs. I'm being more patient. I'm waiting to see if the momentum will continue, and then I will look to sell, but I need to see a nice convincing push down. So that's it for the forecast, guys. None of the pairs is looking good. None of them are showing me any potential or any sort of a sign I want to get in on a trade. But I would say wait for maybe so this evening and Friday, maybe we get some nice moves. Otherwise, maybe next week will be a bit better. And I will see you guys tomorrow in the next forecast.